You're listening to the Decentralized Talk Podcast, your crypto connection.
Decentralized Talk. Decentralized Talk.
All right, guys. Welcome to another outstanding episode of the Decentralized Talk Podcast. This is our 26th weekly show now in production, and we are growing week over week and month over month. Thank you so much to everyone out there who is supporting the show. Last week was our best week ever, and we got a lot of great content for you, of course, on this episode as well. As you have expected, our massively popular 3-on-3 Fast Break segment with Newmark, Stronghold, and Vibe this week, and our spotlight on stable coins. Yes, there's more than Tether out there to hide your crypto earnings in during the inevitable tossing and turning of the digital asset typhoons that have been pounding our tiny decentralized flotillas as of late. Decent. This is not investing advice. This is just our opinions. Please do your own research when investing in cryptocurrencies. All right, guys. So we're going to start off. We're going to talk a little bit before we get into the full show. We're going to talk about why it's still not too late to invest. Prater, tell me why it's still not too late to invest in cryptocurrency. Or, I mean, like in my opinion, honestly, this is one of the best times. You don't buy when everybody's buying. You buy when everybody's selling.
Everybody's selling. Absolutely. And that's, I mean, one of the biggest reasons. I mean, it's down right now. I honestly don't know that I think this is the bottom. I mean, it's hard to really tell. You never know. But I feel like this is a good time to buy. You know, some of the herd has been thinned out in the ICO, the kind of the crap coin markets. You know, there's not as much junk out there. You know, you're seeing adoption from major corporations with IBM and definitely in the blockchain space too. So you're seeing utilization of the blockchain technology itself. And with that, I think you'll see more adoption in the crypto space as well. You know, there's rumors of institutional money moving in. You want to get in before that happens. And I think we've all agreed that Bitcoin, we see it as being a very good store of value for the future. I think those are just a few reasons that, you know, why it's still not too late to invest. It's never too late. And for me, diversification is a big thing when you're investing. And this is just, you know, even if you're not going to throw a huge chunk into the crypto markets, you know, you always want to have some more risky investments in your portfolio, I believe, you know, in case it does, you know, even if you're not a big crypto fan, you want to have that leverage in case the stock market crashes. You know, you've got some crypto, or, you know, you got your gold, your crypto, your bonds. You know, have a little bit of everything. This is not investing advice.
Well, I think if you ever were going to give somebody investing advice, the best investing advice you can give somebody is diversify, right?
I think so. I'm very diversified in my investments, you know.
I would say so. All of us are, I think, relatively young. I think most crypto investors are relatively young. I'm
the oldest one here.
Even the oldest one here, it's still not anywhere near like a retirement age. If you're retirement age,
speak for yourself.
Yeah, well, I'd like to be at retirement age. I'd like this crypto to pop. I'd like my ZenFin to blow up here, and then I'll be at retirement age tomorrow.
Give me 2 or 3 more years, and I'll be retiring.
I need ZenFin to go to maybe about $1,000 a coin, something like that, and I'll just be retired for life.
On a yacht,
$1,000 a coin. Yeah,
no one would ever know.
Billionaire. At $1,000 a coin.
Yeah. No one would know where I was. I would constantly I'd be like McAfee, just hang gliding from different place to different place. I'd be doing the show from a hang glider.
From a bath salt factory.
Donate
from a bath
salt factory.
Hey, dude, if ZenFin's $1,000 a coin, you better want a ZenFin donation.
I'll take one.
ZenFin's $1,000 a coin. You better believe I'm getting some bath salts off of you, brother. because I know you got the good shit. But in regards to like, is it too late to get into Bitcoin? I mean, it really comes down to your belief in the fundamentals behind Bitcoin. You know, if we really are seeing this as a global currency or as a long-term store of value, then it's really never too late to get into it, because if you're thinking of it 10, 20, 30, decades out from where it's at right now, then it really doesn't matter if you get in today or last year, 5 years ago, or 5 years from now, because it's always going to be around. So if you don't have that fundamental belief and you're just looking for short-term gains, then it still might be a good time to get in, but you just kind of have to look at Bitcoin from another perspective other than just an investment, because at the end of the day, I think we're all in agreement that there's this intrinsic value with Bitcoin that can't really be replicated with any other kind of fiat currency. So, I mean, I think if you have that fundamental belief of what Bitcoin could become, then it's always a good time to get in Bitcoin. 10 years from now, it'll still be a good time to get in Bitcoin, because if it becomes what Satoshi dreamt of it becoming, then everybody's going to be using Bitcoin to buy things anyway. So it's like you'll need it anyway.
Choice. Somebody said to me recently. They said, "I don't really know about that cryptocurrency," and I said, "Well,
you seem to talk to a lot of people that speak like that, Tatum."
Yeah.
Well, I live in
not even that
Texas.
Those words that slang.
That's accent.
Yeah, the accent.
It just always reminds me of when I have these conversations. It reminds me of the Dewey Cox story, where he's like, "Get out of here, Dewey! You don't want nothing to do with this.
You don't want no part of this.
It's called cocaine, and it makes all your bad feelings turn into good feelings."
I think I want to try some of that cocaine.
I think I want to try me some of that cocaine. Well, it's the same thing with crypto. I feel the same way. Like when people see me, checking my crypto or reading crypto articles or talking to somebody else about cryptocurrency, and they overhear it and they come out and they want to find out, what's going on. It's always it seems like a backroom thing. Like, dude, you're into that cryptocurrency? I'm like, what's that all about? I'm like, tell me about this cryptocurrency. And then, you basically have to, you don't want no part of this. It's volatile as hell. Turn all your small finances into big finances. And that's the goal. But
makes you feel real good.
It makes you feel like you lost everything you invested in. And then the next day it makes you feel like you're going to be rich. But the main thing that happens in most of those conversations is that you get to a point where you explain how you feel about cryptocurrency and where you see it going, and then it ends up being one of those situations where I tell people, look, you don't just like you said, Heston, you don't have to get involved in cryptocurrency. It's going to get involved in you.
It's going to get so up deep in there and get so involved. It's going to be so much involvement. Explosions of involvement.
Well, and I mean,
all over you.
Get in you.
Like a lot of the countries.
I agree, though. It is going to get all up in there.
Political volatility and economic issues. You're already seeing a rise in cryptocurrencies, even recently. I mean.
So what do you guys think about? So we just looked at Bitcoin domination. You just real quick sidebar. What do you guys think about? So we've seen Bitcoin domination. You can check it at coinmarketcap.com. We've seen it go from 80% of the value, 5-6 years ago, to basically after May of 2017, it's halved and then halved again, and now it represents about 45% of the cryptocurrency market.
Yeah, I think that's kind of a natural result of the types of projects that are being developed. But I don't see Bitcoin really losing much dominance just in the foreseeable future. It's not just the name; it's kind of what it represents. And at this point, there's just so much invested in it that I think it will always still be that store of value. Much like gold. There was something I saw the other day. It's like you never hear anybody say, gold has no value because I can't buy a cup of coffee with it. It's the same kind of argument with Bitcoin. Like just because you can't buy a cup of coffee with it, or it's not.
You could.
It just
I guarantee if you walked into Starbucks and gave them your gold watch, they'd give you a cup of coffee.
Yeah, you could. Definitely could, but it's like it's not easy. And it's not really easy with Bitcoin either. You got to find somebody that accepts it, and then there's the transaction fees and the how long it takes and the volatility and all that. So it's not necessarily easy, but that doesn't mean it doesn't have value.
Think about the internet. When people used to string their telephone cords up across their house to get on AOL and check their email. And you remember when the internet?
You don't do that anymore.
Do you remember when the internet
when I get on the chats?
Yeah, on the chat rooms.
Yeah,
I'm building my websites on Angel Fire.
I was playing Warcraft on the dial-up. Did y'all ever play that?
Oh yeah,
yeah. I played original Warcraft. I played Doom.
I got down on some Warcraft and StarCraft.
Doom and Duke Nukem.
Oh yeah.
But when you were playing, like nobody could call you. Nobody could call you.
Yeah. I remember my parents would always get so pissed off because I'd be on the internet, them internets for so long.
You get a Warcraft game going, it's like 8 hours. You can't get a phone call.
That was back when you had to remember people's phone numbers.
I'd be pissed if my parents had to make a phone call. Don't pick up that phone.
That village took me 16 hours to build.
They're attacking right now. But no, I have a lot of people ask me, because everybody, like in my personal life, they know I'm into Bitcoin and podcasts and all this stuff. So they ask me a lot, when should I get in? Is it low now, or what's going on? And it's I just try to tell people, don't necessarily look at it as an investment like that. It's not necessarily a stock. It just goes back to the argument of like, our country is how many trillions of dollars in debt. Eventually this is going to blow up in the face. They're driving down the highway with the emergency brake on. So, you're hedging your bet against the crash of the US dollar, just like every fiat currency has always crashed through all of history. So, if you see it more like that from that perspective, instead of just an investment like a stock, then it's really never too late to get in, because you're gonna eventually have to get in. If you want to buy your bread or whatever, then you're gonna have to have some Bitcoin.
Audit the Fed. Well said. So that brings us to this week's Coin Focus. We're talking about stable coins, and that's one of the main advantages to a stable coin. Just broadly, Predator, give us a broad definition of stable coins. What is a stable coin, and other than Tether? Well, I guess just tell me what is a stable coin.
A stable coin is a coin that holds its value at a certain price. It can be tied to some other form of asset, be it fiat currency, gold, diamonds. There are, so they gotta go in the terms of fiat collateralized stable coins, crypto collateralized stable coins, and non-collateralized stable coins. So
let's break those down. Let's start with a fiat collateralized stable coin. Heston, what is that?
Well, first of all, before we go kind of too in depth of the different types, I do want to express the fundamental need for a stable coin. There has to be a stable coin out there. There just really has to be in this. Yeah, for mass adoption to take place, there really has to be a stable coin in this ecosystem for multiple reasons. One, if you're going to store your money in something other than a fiat currency, you're going to need something that's not volatile. So if you have $10,000 to invest in cryptocurrencies, but you don't necessarily want to invest it all right now, but you definitely don't want to have it in US dollars so you get hit with inflation, you want to store it in an asset that's going to stay stable, so you don't have to worry about your $10,000 dropping down to $1,000 while you're trying to decide what to invest in. So that's one reason. And then also just for daily transactions. So, if Bitcoin ends up being the gold, the store of value, long-term store of value, and another cryptocurrency becomes a daily transaction coin, then it's going to have to be stable, because with volatility, it just would never work in a real-world scenario. If I want to buy a cup of coffee, today it's $5, but because of the volatility, tomorrow that cup of coffee would be $4, and you just got ripped off, or $10. Who knows? It could be $1. With volatility, it just doesn't work for daily transactions. So you have to have a coin that's stable. And yeah, like we were just
taking
saying,
a step further than that too. If to the point where you get paid your salary in crypto, and the crypto crashes 20% the next day, then you're getting paid. I mean, you're not going to want to get paid that much less week to week, or that much more. You want that stable amount of money that you're gonna make, and then
so it's very important to make this stable coin work.
Well, let me play the role of the devil's advocate here, and play the role of the maximalists out there, the Bitcoin maximalists out there. Bitcoin is highly volatile right now, but I think from the maximalist perspective,
if it reaches $1 million, it's not going to be as volatile.
Well, long before a million. Once
exactly $1 million.
Once all the coins are mined. So once all the coins are mined,
that's 2,140.
Okay, I mean that's fine, but I think that's still, this is the argument that they're making, is that it will become significantly less and less volatile as we get closer and closer and closer to all the coins being mined. And you'll really only need Bitcoin at that point. Like the Tether and these coins they're useful tools right now to harbor your
trades.
Digital. Yeah, exactly. So when you see shit going crazy, you can throw it into one of these assets. But over time, Bitcoin will become less and less volatile, and it'll be more and more of that.
Well, I think with the kind of I don't know if invention's the best word, but
innovation.
The innovation of atomic swaps, it doesn't really matter which coin you're using. Even if Bitcoin becomes less volatile, it's probably going to be the main one in use, but I think you're going to have other stuff out there that's just going to get used as well.
I agree. I think as the price of Bitcoin goes up, and as more people own Bitcoin, I think the volatility will lessen and lessen and lessen and lessen. But what I think of is a world where I deal only in cryptos. Okay, my income is from crypto. I get paid in crypto. I buy everything and sell everything.
Loans in crypto.
Yeah, like everything is in crypto. I don't want to have my quote unquote checking account be different amounts every day.
And honestly, I think
it is anyways. I mean, your checking account is different amounts.
True, but it's like at such a slow rate that it really doesn't affect like my daily life. And that's what I would like, is something that is not inflationary like the US dollar, but something that really
keeps going down and down and down.
Yeah.
I want something that is not inflationary like the US dollar, but something that's pretty much stable, where I won't have huge fluctuations in my account on a daily basis or an hourly basis.
You look at the benefit of that you could day trade your savings account, cash out on the high.
Yeah. So no, I agree. I think you might be right there. It is like a short-term problem maybe, but it is a problem right now. It's not just for traders, but for mass adoption to take place. It just seems like there has to be something out there that's not going crazy every day. When the market's crashing 20% in a day, it's like something that's not crashing.
Yeah, as sad as it is, I think, well, if and you'll see as we kind of come into these different types of stable coins, how complicated some of these get and how some of the less complicated ones are pegged to fiat currency. I'm afraid that the best way to do it is going to be through fiat currency pinning, and with that,
Well, when we get to that, I
some of the
want to tell
more
you why I hate
frequent.
that.
Well, but some in the future, I think governments are going to come out with stable crypto. You'll have the crypto dollar, and they're going to pin to that, and that's going to defeat the whole purpose of this process.
Yeah.
Yeah.
No, I was just thinking that the other day. Is like when is the tide going to turn so much that the government can't fight it anymore, and they decide to come out with the USD token? You know, where
Yeah,
it's
but
just
I think this
a
I think
dollar.
this is the perfect out for them. Their sneaky ass Fed that nobody can audit. I mean, when we talk about it in a second, crypto
Hashtag
collateralized,
audit the Fed.
hashtag audit the Fed, hashtag who is Ron Paul, crypto
Ron Paul
collateralized
coin.
Ron Paul coin. Yeah, even Marxist crypto. He was a big Ron Paul guy. I think he still is technically, but he was a big Ron Paul guy before he got into socialism. But the crypto collateralized stable coins, they can do the same thing. Well, okay, so let's talk about fiat, just to walk everybody into this. So people are coming fresh into cryptocurrency. They found Decentralized Talk podcast, and they're like, dude, these guys are awesome.
Fucking super dope.
So now they're hooked. It's like a crack addiction for them. But they're saying, I want more information about what is a fiat collateralized stablecoin. And I can relate to that.
Google
it. So without them having to change the dial and get off of their phone.
Open a new tab.
Who's using dials?
We're on iHeartRadio.
Don't you change that? Don't you change the dial? Don't you change to another FM station?
Don't you change the dial?
Don't you change that dial.
Don't you unplug your dial up? Sorry, I've got a base of words and knowledge, and it's stuck in 1995.
I know. I definitely.
I can only look at one web page at a time.
What was it? What was it? The dating? What was it? The cut it out.
Cut it out.
Was that the dating game?
No, that was from.
That was
DJ Tanner. From
DJ
Bob Saget.
Jeff.
No, Bob Saget, and they just did a remake of it.
Yeah.
Full
Step by
House.
step. It was Step by Step.
Oh no! It was a dating show.
It was Full House.
No,
It was Full House.
Show where he was like, cut.
No,
it
that's
out.
Joey. Cut it
Yeah,
out.
it was. Cut it out.
It's Joey.
Yeah.
Full House.
Uncle
Oh,
Joey.
shit.
Yeah.
Okay.
Uncle Joey.
I'm confused.
So okay, so somebody tell me about cutting out fiat collateralized stablecoin. I'm going to try to get this in.
Nope.
Fiat collateralized stablecoins.
All right.
So what is that?
So that is probably right at the time the most popular way of creating these stable coins. Okay, so the whole
Easiest
point
way
is
to.
yeah, definitely easiest way, easiest to understand too. So like the whole point is to keep a currency that's stable to the U.S. dollar is the most common, currency to keep it stable to. So Tether is what they do is supposedly, we have technically no proof of this, but they back every Tether coin with a US dollar. So Tether is one that's a fiat-backed cryptocurrency, and every Tether token is backed by a US dollar. So that's what keeps the price stable. So if it dips below, it goes up. It dips above, it goes down. And there's pros and cons to that. The pro is obviously it's going to keep stable at $1 because it's backed by fiat money. The con would be if it's not really backed by fiat money. Also, it's not scalable. So you have to put trust in the Tether company that they really do have $1 for every Tether. And I think right now they're up to like 2 billion. So you're trusting that they have $2 billion in bank reserves. In case everybody wants to cash out, you're trusting that they have that money in a bank reserve where they could, pay people out in whatever cryptocurrency they cash out.
If you're buying Tether, you're giving them $1, so they should be able to take $1 and go get that dollar for you somewhere else if they don't have it in reserve. But you're also trusting that they do that.
And you're not paying transaction fees, but they are.
In theory, but you're also not paying them in US dollar. You're paying them in whatever you bought the USDT with, correct? I mean, Bitcoin, Ethereum.
So the value of that should be $1 when you're buying it, in theory, as well.
You also there's also no possible way to withdraw your USDT into USD. So you can't take your Tether immediately into cash, say on like Coinbase or something like that, like you can with Bitcoin, Ethereum, or those ones. The straight crypto to USD, you can't.
I have never owned Tether.
Me neither.
Never owned a single Tether.
I would say the major downside though is right now it works, and it works really well. It is, I mean, it straight up stays at $1, but it's not scalable. So right now they're at $2 billion. They might have $2 billion, maybe. But what happens when it's
90 trillion?
Yeah, Trader said, they should have $2 billion because we've given them $2 billion.
Exactly.
Yeah, but I just don't see them having $200 billion in bank reserves. And what bank is going to have the reserves to even have $200 billion? I just don't see it possible to be truly scalable on a really large scale.
Agreed. Probably my favorite
downfall.
Fiat collateralized stablecoin is Petro. I think that one is the
Yeah. That's definitely the least sketchy of them all.
Yeah,
Almost backed by oil, right?
Yeah. So supposedly.
It was
Venezuelan oil
reserves.
And there's nothing sketchy going on there.
No. They're just an up and up company.
When I think of stable, that's what I think of Venezuela.
Yeah. Oh yeah.
And oil.
Yeah, just a good government.
Never fluctuates.
Oil,
gas prices.
Trust. Venezuela.
I can't remember the last time I paid more or less than $1 a gallon for gas. It never goes up and down.
No.
It's always the same. Like there's that gas price.
Good old oil.
Rock solid.
Always $1.
I think to me the non-collateralized stable coins are the simplest actually. And I'm not trying to be super contrarian today, but when I know everything.
Please explain it to us then, Taylor.
Okay, so a non-collateralized stable coin basically it acts like the Fed does currently. So they're not backed by any collateral, right? They're not backed by a fiat, they're not backed by oil, or they're not backed by pork bellies, nothing. They are actively and openly market manipulated based on volume. So they maintain and level the price based on you could do it a number of different ways, but if you actually bought into one of these coins and you bought into this idea, you'd want it to certainly be a smart contract that basically said, based on the current value of this cryptocurrency, how do we peg this to the price of one USD? Well, they manipulate the total supply, and that moves their currency value up and down and maintains it at $1. So that to me seems like that's like the simplest. That it doesn't require anything other than a smart contract, and it just says, hey, we're going to manipulate this shit and make it at $1. Now, obviously, that's got a lot of the same scary things about it as fiat collateralized coin, because what happens to the fiat? Like, what happens if the fiat collapses? I mean, that's the big draw, right, to cryptocurrency, is that we want something that is more substantial or more stable than fiat currencies. So the idea of tethering something to a fiat currency is terrifying to me, and the idea of de facto tethering something to a fiat currency in the case of non-collateralized stablecoins is even more terrifying. So did that pretty much that ran it through pretty good?
Yeah, I mean that's pretty much the non-collateral cryptocurrencies. Yeah, Carbon is one that I'm just reading into now. which they kind of base their entire model on adjusting the supply based on how close it is to the U.S. dollar.
That was pretty simple too.
Yeah.
But what's absolutely not simple, and what I think we're probably going to spend a little bit more time on, and this is something that, you know, in preparation for the show, we've all kind of been going back and forth to try to break it down. What exactly is going on here? It's the crypto collateralized stablecoins. So we already know about the fiat collateralized stablecoins. We understand how that works, right? That means that they're pegged to the dollar, and they actually trade. You know, they have on hand in a bank somewhere liquid money. They have the dollar bills in their hands, you know, supposedly, right, to match up for the cost of it. And then in the non-collateralized, they're changing the supply to adjust the price. This is a whole new world, the crypto collateralized stablecoin of cluster. So who wants to stab at it first?
I don't think anybody wants to. What
okay, so let me read the Investopedia. It's just a little paragraph here, and then we'll kind of break it down from there. So crypto collateralized stablecoins. Crypto collateralized stablecoins are similar to fiat collateralized stablecoins, except that their underlying collateral is another cryptocurrency instead of real world tangible commodity or fiat currency. So so far that makes sense, right? Okay, it's just it's like the original one, only it's tied to another crypto. So to accommodate the adverse impact of the collateral cryptocurrency's volatility, the stable coins are over-collateralized, quote, over-collateralized, end quote. That is, a higher valued cryptocurrency that is, a higher valued cryptocurrency is used to issue a lesser value stable coin. For instance, $1,000 worth of Bitcoins may be required to issue $500 worth of stable coins. Even if Bitcoin loses 30% of its value, the stablecoin will still remain covered. Additionally, more frequent audits and regular top-up for any shortfalls in collateral value will keep stablecoins covered. MAKR DAO, DAI, this is Investopedia. They're referencing MAKR DAO, and we'll talk about that here in a second too. Allows for the using of basket of cryptocurrency assets as collateral, so they diversify it, and it's pegged against the U.S. dollar and completely backed by Ethereum. So, who wants to?
Overcomplicated.
Yeah, I think so. The basic concept behind the crypto collateralized is, instead of pegged to the U.S. dollar, it's pegged to a different cryptocurrency. So in the MAKR DAI example, it's backed by Ethereum.
Okay, but so that doesn't make any sense to me though. How are you mitigating the volatility of cryptocurrency by pegging a cryptocurrency to another cryptocurrency?
You're over collateralizing it. So
yeah.
if it does crash, you're covered. But if it completely crashes, you're screwed.
You're screwed.
And
yeah.
it seems like there's two.
Go on.
To over collateralize, you've got to. So there just seems like there'd be an issue there for me. The same problem with Stellar and the scalability. You're having to overscale, double what you're actually, to cover the fluctuations in price. You're having to double the price or double the collateralization of that product. So that, to me, makes it even less scalable than a fiat collateralized stablecoin. I don't know.
Why would I don't understand why I would ever use one of these coins. So I give you $1,000 worth of Ethereum and you kick me back $500 worth of Ethereum?
Well, I think you're not, I don't think it's necessarily meant to be used like that. I think because you're only
your $1,000.
Yeah, you get your $1,000. So I mean, you're just storing it there until you need it, and then when you need it, you'll get the full amount that you put in. Mm-hmm. It's just setting that collateral aside for market fluctuations.
They have to set it aside.
Yep.
To double it. So that's why I was saying scalability wise, it seems unfeasible. Just because every time you invest $1,000, they've got to have $2,000 there to cover you. Or
they just value, or they half it. so they could do it like that, or they could half it, which is what I think that they're doing in a lot like Haven. So instead of you investing 1,000 and them having 2,000 to cover it, you invest 1,000 and they issue you 500.
I don't feel like a lot of people would use that.
No, I know, that's what I'm saying. So basically, you give them 500 to play with in the market, and they use that to adjust the. I mean, that's what it says. It says, for instance, $1,000 worth of coins may be required to issue $500 worth of stable coins. And I think it's the same thing like with Haven. So you give them $1,000 worth of Haven, and then they issue you back. They split it up, and they issue you back like 80% Haven, and then 20% nomins, right? And so they play with those nomins and invest them and try to play around with those, and they actually pay like, I mean, my understanding is they pay like the way we stake. They pay to verify transactions, and they give you interest like gas.
This little model only works if the market's going up. You know what I mean? Like if the market continues to crash to zero, then it does.
Yeah, if it goes up or down, it doesn't really. If it goes up or down and nobody all pulls out their money at the same time, I think it makes sense. It'll work. But if there's something,
if the market crashes, it doesn't work for anything.
Well, it would work for Tether, right? Because if they do have the money, then
you can pull out your Tether. True.
But that's about the only one that would work.
Yeah.
I mean, I like MAKR DAI. I think that's my personal favorite. But I do still see a lot of issues with it as well. And that's the thing with all of these, basis and MAKR collateral, or I mean, not collateral. What was the one I said earlier?
Haven.
There was another one. I don't know. There's a lot of them. What did we say earlier?
Base coin. They changed their name.
Basis.
Yeah. Basis. I don't remember what it was, but what do we say? There's like 30 of them.
Saga.
There were as of February of this year, there were 35 of them. I don't know how many are still around.
So I mean, one thing I see across the board is like none of them are perfect. None of them have solved this problem yet. It's great to see them all building stuff and trying. I just don't see any that are going to work long term that are truly scalable to solve this issue of like reducing volatility.
Well, maybe that's the plan then. Maybe the short-term plan is to work with like a Tether or something that addresses the volatility in the short term, and hopefully that will span the gap so that we can reduce volatility in Bitcoin broadly as we get more and more stability in Bitcoin by itself.
Yeah. No, definitely. And, I don't think we really hit on Basis, or they used to be called Basic Coin. What they kind of do is they are also non-collateral based cryptocurrency. And they adjust the supply depending on market fluctuations. But they also sell bonds that you can resell depending on the price. So once the price dips below $1 to increase the demand, they sell the basis bonds that you can resell back to them once the price goes back up to 1, and then they burn those coins that you sell back to them to decrease the supply. But the problem with that is that you're buying those bonds in faith that the cryptocurrency is going to go back up to 1. If it continues to go down, then you have these bonds that you can't sell back because they're dropping in price, which creates just a downward spiral in price. And supposedly Basis is solving that problem by using their ICO money to stop downward spirals, death spirals. But it's not an unlimited supply of ICO money. So if that really, if Basis really does start to go down to zero, they're not going to have unlimited money from this ICO to drive the price back up. So Basis was one that was pretty interesting to me, but I still see a lot of issues with it as well.
Okay, so we talked about Haven, we talked about Basis, we talked about MAKR. And we talked about Tether. So I think that pretty much covers the top stable coins. A little bit about what they do and some of the controversy around each of them. So with that being said, I think it means it's time for our 3-on-3 fast break. That's where each week we pick 3 coins from the 300 level market cap and we make our pitch for that coin. We give an overview of the coin. We talk about the price, the market cap, a little bit about the supply and what does it do, and what potential does it have for the future. Somebody else is going to have to be the timer today because I don't have my phone near me.
Got it.
Which is weird. Now I have phone anxiety.
Somebody could be calling you right now. Oh,
No, I only know
never even know.
you two and my wife. So, okay, who wants to go first?
I'll go first. I have a stable coin.
Damn it, I looked in the 300s for a stable coin.
Oh, it's not in the 300s.
Your time starts now.
All right, so this week, I don't even know if this one's on the roadmap. It's definitely way outside the 300. But it is a stable coin, and it's called Stronghold. It is a fiat-based cryptocurrency, so it's backed by the U.S. dollar. So technically, it should be worth $1. The website is stronghold.co. The market cap is $606. And it is only tradable on the Stellar network. So it is definitely way outside of the 300 level market cap.
Sounds strong.
Yeah, it is strong. It's an asset-backed USD token on distributed ledger technology. Now, the good thing about Stronghold is IBM just recently came out and said that they are in a partnership with Stronghold and Stellar. Basically, I think it's like last Tuesday. So obviously, you're not going to invest in Stronghold and be like, this is going to go to the moon because it's always going to be $1. So I didn't really pick this one as one to drive profits or for investment purposes because I just kind of for the interest of the topic of the day, which was kind of stable coins for us. And but that being said, you may want to look into Stellar because obviously they got a lot going on with IBM and Stronghold here. So the main purpose is for businesses with Stronghold in settling cross-border payments or if they want to invest in cryptocurrencies. So you can actually go on Stronghold and buy, sell, whatever you want to sell, any cryptocurrency or digital asset that you want through their platform, using the Stronghold token. All right, I got 48 seconds. Do y'all have any questions about Stronghold? I know I didn't really cover too much, but it is what it is. It's a fiat-based cryptocurrency on the Stellar network backed by IBM.
$606. What is it? So its market cap is $600. So it means basically
it's only that many people have invested in it so far, but
I mean that could be like one person with $606, or it's 606 people with $1.
Could be either of those. That is true, or somewhere in between.
I'm kind of a math guy, so 303
people with $2.
Wait, hold on. Oh yeah, no, yep. It does.
That is also a possibility.
Or one person.
Yeah, we covered that, Hesto.
That was the first one.
See, I'm not a math guy. You are out of time.
All right, I guess I'm going to go. I'm going to talk about Newmark. And you guys will have to ignore my Texas Beagle out there going wild. So
Maker's Mark? This is
Maker's Mark. It's in partnership with Maker's Mark and has nothing to do with Maker's Mark. No. So Newmark, they're called new. So when you're buying them, you're buying new. N-E-U or new. It's 65 cents right now. It's up 30% today, which I thought was really interesting. Let's see. I'm trying to pull up all my stuff on it. I don't have it here. Okay. The website is https://neufund.org. 18.7 million on the market cap. It is 100K in daily trading value, so still pretty low. 28 million circulating supply. You can pick it up right now on your local Binance exchange. So what is Newmark? Well, I'm glad that you asked. It's going to shock you, but they're creating the first decentralized global stock exchange.
What the fuck?
Yeah, which is blowing my mind because I think the last 4 coins I had were creating the first decentralized global stock exchange. So somebody's lying.
Somebody's lying.
Somebody's lying. I'm going to say it's not Newfund. I'm going to say Newfund is not lying, and that they are going to be the first decentralized global stock exchange. Basically, the idea is that you can buy equity in a company, and they're going to help raise funds for companies in euros. You can't do this in America. It won't work in USD. But I guess because of our regulatory market is at a point right now where they don't really know what it's going to look like, so you can't use it to invest. But it's similar to other cryptocurrencies out there. If you want to raise money for a company that you want to invest in, they'll basically supply and build the blockchain for the token around it, and then you'll have a kind of a sub token on their token system, and people can buy and sell and trade it to help raise money for you in a kind of like a crowdfunding kind of concept. I got 8 seconds. Questions?
Are they regulated? Seems like a cesspool of sketchy behavior.
No, actually, the website looks pretty good. They're highly regulated. They follow the EU regulations. It looks like a legit organization. They don't actually have anything done yet, so they
promising.
mention that on the website. So it looks like a lot of really good effort.
Thanks for answering the question.
All right, Hesto, tell me about Vibe or VBay.
Yeah, no, it's the Vibe. I picked Vibecoin because I like the name. It's a vibe. So Vibe is actually it's kind of interesting just because it's a little different.
That is investing advice, by the way. Always pick cryptocurrencies by the name.
Yeah, it's just a little different. Honestly that's why I picked it, is because it's a little different than most cryptocurrencies that we cover. It's not like the same old thing of fast transactions and low transaction fees, and it's highly scalable. So Vibe is focused on the augmented reality, virtual reality space. Think augmented reality concerts and augmented reality teaching lessons and things where you would be watching a hologram in a specific place or something like that, you know? That's really what it's focused on, is that that space of holoportation.
So it's like the Oasis in Ready Player One?
Yeah, I mean, to a certain extent, I guess. So the real world examples is I would think is like, you know, buying tickets to a concert, but you live in a whole another side of the globe. You can't make the concert, but you can watch the concert via hologram in a virtual reality headset from afar. So why would they need that on the blockchain? What is Vibe? How does that have to do with anything? Basically, the Vibe token is what they would use as microtransaction currency for the Vibe hub. So in this Vibe world of augmented reality and virtual reality, there would be hubs where you could purchase digital things, or you could purchase concert tickets, or you could pay for your digital classes. You know, so again, another example would be you're in a different country, but you want to take this economics class. Well, instead of just being a purely online based class, now they could have, with virtual reality nowadays, that you can just look at the teacher. You can be in the same room as the teacher with the virtual reality headset and augmented reality. So you could pay for your classes in this little hub. So the token is just a means of microtransactions within this virtual reality augmented space called the Vibe Hub. I got about 20 seconds left. You guys got any questions?
Yeah, well, you remember back in the day when the president could like take over the television, and like all of a sudden, like if the president was on, like you were screwed, like it was on every channel.
The channel would change, yeah.
Right. And so, I mean, if something similar to that happened when you were doing like, you know what I mean? Like you just say you led like the whole world on these things, and then all of a sudden, president comes on, and everybody everywhere is just like, fuck.
Yeah, I could see that. I think this would be more
a concert right now, man.
I think this would be more like, like a channel, like a TV channel. So you could tune in to the Vibe Hub and, view all kinds of concerts and all kinds of things, all kinds of different live events. So, I mean, I don't think it's going to be one of those things that takes over the world and everybody's using it. And then when the president gets on your virtual reality headset, you just see the president. I think it's just going to be like, there's probably different channels in this virtual reality, augmented reality world. Vibe Hub is one.
This is the future, bro.
Because anybody can be a he nowadays.
We're talking about 2040.
X. What do they call them?
Yeah, Z, bro.
I can't focus right now.
You heteronormative bastard. Well, that about wraps things up for this episode of The D. Be sure to tune in next week where we attempt to interview somebody about something. Actually, we got more stuff coming about stablecoins. So we got some interviews. We've been reaching out to some of the different different authors about stablecoins and being able to attach a coin to gold specifically. So stay tuned to find out if that's interesting or not. Check us out. Be sure to send comments at DTalk Podcast to our Twitter and Facebook. Decentralized Talk on iTunes, iHeartRadio, Music Coin, and anywhere you find tasteful podcasts.
Castbox, I found us on there the other day. Oh, and we are on Spotify nowadays. So.
And we are now. I've been saying we're on Spotify for a while. We're actually on Spotify now.
I'm blaming Spotify for that one. That
took a while.
Yeah, about 2 months.
So links to the website in the description below. Stay decent, cryptos.